Hello everybody, we are looking at gold on this video with an inflation or talking about inflation for if you want to see how much our dollar has inflated. Looking at commodity prices including gold is one way of doing such a thing. And well, gold in 1970 or for many times before in the 20th century was $35 per ounce. And today it is over 1200 per ounce. So we've seen a significant increase. And the biggest increase was throughout the 1970s, going from 35 up to what was over 800, but it settled within this range between 300 and roughly 450 per ounce. That was a 2-decade period range. And the rate of increase we have had this year, or this decade, or the last 10 years or so, has been very light in comparison to what we have seen in the 1970s. For a move from 35 to 350, which would be about right here, is about 1,000%. And 1,000% from 250, well, we got to get well over $2,000 per ounce. So the gain has not been quite as big. If you're looking at this chart, you're thinking about a top or a bubble. When you are breaking out of this range that we had, I guess the range you could say might be even between this level here at 475. It has not went up that much to signify that its breakout is finished. It's still breaking out much, much higher towards the upside. And there's one saying that Brian Shannon from alphatrends.net speaks of, and that is, from failed moves can oftentimes create fast moves. And we were in this trading range for quite some time. It entered the trading range in 1980, and it broke out of it over a quarter of a century later. This is a quarter-century range, and the failed move, that would be this move right in here. The breakdown in the late 1990s, and then from that failed move brought the fast move towards the upside. As far as these moving averages are concerned, the yellow moving average represents the 5-year moving average, and the orange one represents a running average. Not a VWAP, but it works like a VWAP. A VWAP is a volume-weighted average price from a particular period. This does not weight volume. However, the average price that gold has traded at since 1968 is roughly a little over 300 per ounce. And interestingly enough, when we had the failed move or the bottom, it was right at this significant period. So therefore, gold's been going higher. The reason for that is because of inflation, because we have a monetary money system that is creating an excessive amount of money. So it's not really that gold has been going higher. It's because the value of the currencies are going lower. The next chart we're going to look at is the CPI inflated gold chart from the same period of time, going back from 1968 to today. And going back, we can see that as an average, it got over 2,000 per ounce back in the 1980 high. And the blue lines on the screen represents Fibonacci. The Fibonacci from this high and the Fibonacci from this low. And the 38.2% level was a little over 660 or so. It got above that. Then around 1,000 was the 61.8%. And now the 76.4 is a little over 1,300. Now, whether that will mean too much is very difficult to say. It did find resistance at its previous Fibonacci level. As far as the average price, support in the early 1985s, but then the breakdown below in 1990s put gold into a bear market. And when we've seen before, gold was in a range-bound period, when you see anything priced in dollars over 25 years staying flat, what that means is that it is getting tanked. It is deflation. And people talk a lot about inflation and deflation, and the way I personally see deflation is this. If we take something simple like, say, a price of gas, say $4 a gallon, and say a year goes by and it's $5 a gallon, some people may say that's inflation, where others or myself would state that's deflation, mainly because, well, it's only $5. Has the increase in money supply been higher than 25%? And let's just assume hypothetically that it is, then that would be deflation. So when gold was just ranging between that 300 to 450 range for a quarter of a century, in my opinion, that was deflation. And this is CPI numbers. I don't really put too much emphasis on the CPI myself, which is why I have shadow stats numbers, which are be much, much different. This is the shadow stats numbers. After all, when CPI is stating that inflation's about 1.5% or 2% a year, that's totally bogus if you take a look at all of the basic and just stuff that we use, whether it be the houses, whether it be cars, eggs, milk, energy costs, gold, silver. The list goes on. The average of those items are 3, 4, 5% anyway. So I cannot give the CPI much credit. Now the shadow stats is much more aggressive towards its inflation. It's stating that in 1980 gold was around $6,000 per ounce. And obviously it just tanked so much to where its average price is declining, meaning that it has been devalued down to such major degrees. The 38.2% Fibonacci level is roughly here at about 1350, 1400. And then you got the 61.8 at 2,500. And many people talk about gold going to 5,000, 6,000, or maybe even exceptionally higher than that. It really wouldn't be that big of a surprise for that to happen, especially if we go through more rounds of stimulus and such. It's just going to devalue the fiat currencies that we currently have. So I said the CPI numbers seem a little bit fraudulent, and maybe even shadow stats, maybe a little bit too aggressive for that matter. So what I have done is I've taken the average or the median between inflation-adjusted shadow stats and inflation-adjusted CPI, and what I get is this chart here. And within this, we can see that maybe 4,000 might be a likely target where we could go to reach this high. Here's the deal. Let's just assume that we retest this high in the upcoming months and maybe even years. If that's the case, then what level will we have to get to? Because it wouldn't be 4,000. Because let's just assume, hypothetically, that late 2011 we retest these highs. It would be much higher than 4,000 because as the inflation increases, as the money supply increases, this number is going to get higher because this is adjusted for today's money, which is month ending July 2010. Therefore, like say month ending November 2011, this number might be up to 6,000 or 6,500 because the inflationary trade. So I'd like to thank you for watching this video. Sorry about this bottom part here. I don't have the dates on there. I just realized that actually now. However, nonetheless, this is 1970, 75, 80, 85, 90, 95, 2000, and so on, and so on. So thank you for watching. Have yourself a magnificent day. Bye-bye.